Okay, good morning, everybody. We're going to go ahead and get started. My name is Katie Ensweiler. I'm the marketing manager here at Von Lehman CPA and advisory firm. Happy New Year. We're excited to have everybody a part of our first event of 2021. So a few housekeeping items. First of all, if you have any questions for our presenters today, you can go ahead and put them in the chat feature. If for whatever reason we're not able to get to your question, I will be sending out a recording of the presentation, a copy of the PowerPoint deck that they will be going through, as well as their contact information. So please feel free to reach out to them afterwards in the event that we cannot get to your question. Also, we're excited to offer CPE for today's presentation. So what you'll need to do is pay attention to the code words that pop up. There will be 3. We'll bring it to everyone's attention once they are on the screen. We will display them for about 10 seconds, and you will need to capture those in your follow-up evaluation form. So please make sure you take note of all of those. With that, I will go ahead and turn it over to Kristin Leadingham, Senior Manager.
Good morning. So my name is Kristin Leadingham. I'm a Senior Manager at Von Lehman. Been here for 11 years now, and I do audits mostly with our governmental clients, and then also do a lot of the single audits. Colleen will be also presenting today. She is a senior manager as well, and she works a lot in the nonprofit single audit niche. So we will be splitting up the presentation and going forward, but I'll let her also introduce herself real quick.
Hi, I'm Colleen Swanson. I've been with the firm for about 8 years. And as Kristin said, I am specialized in the nonprofit niche of our firm, and I work primarily with nonprofit entities, and I work with a lot of the entities that have federal funding within that nonprofit niche. So it's been a specialty for me from prior to coming to Von Lehman and being at Von Lehman.
Okay, so we'll start covering today's presentation. We have the agenda, and there's a few things we want to cover. We want to go over what the uniform guidance really is, specifically subpart F of that uniform guidance. We'll go over what the compliance supplement is. Then we'll go over various compliance requirements and the testing that we are required to do for those requirements. We'll go over sampling and why we choose the population sizes that we choose, and then have any questions that you probably need to ask yourself at the end to make sure that you're ready for your audit. So first, we'll cover what the uniform guidance is. So the uniform guidance became effective for all federal awards or funding increments. So that's if you get an additional increment to your federal funding issued after December 26, 2014. Previously, all federal awards had to follow all the different OMB cost circulars. So there were various cost circulars that stated what the cost principles were, what the grant requirements were for any federal funding. Well, now it's all under the uniform guidance. So previously we had A133, which was a specific cost circular. Now it's the uniform guidance. So A133 is no longer effective. And neither is many of the cost circulars either. So everybody should be aware what the uniform guidance is, because this is what provides all the administrative requirements, the cost principles, and the audit requirements for federal grants. And then subpart F is what sets the audit requirements for both the auditee and the auditor, and this is what we have to follow. So uniform guidance provides the guideline for your administration of the grant and says we have to have an audit. So I'm going to dive a little bit more into subpart F. What subpart F states is that non-federal entities that expend, this is not receives, but if you expend $750,000 or more during a fiscal year, the entity must have a single audit. And this is based on your reporting entity. So if you have to consolidate your financial statements, it's based on that. It's whatever is required under US GAAP as a reporting entity. Expended is based on when the activity related to that federal award occurs, and usually is based on your basis of accounting, which should be US GAAP. Expenditures under loan programs, those are a little bit different though. So while most of your expenses are based on when they incurred, The loan programs are based on your beginning loan balance, plus any new loans made or received during the year, and any additional interest subsidies or cost allowance that's received. So those are a little bit different. And then we have non-cash assistance as well that could be included in your total $750,000. And that's just items like free rent, food commodities, donated properties. Those all get valued at fair market value. The other thing that is kind of unique this year, if anybody is receiving PRF funding, that's very, very unique and is not necessarily based on the activity related to the federal award, as now we have this loss of revenue calculation that we have to determine. So this year is a very unique year, but overall, these are the general principles for determining my expenditures to get to that $750,000. And this is also what you'll use to determine the expenditures you report on your schedule of expenditures of federal awards. So subpart F provides the scope of the audit. The scope of the audit is the whole picture of what we have to look at. So the audit has to be conducted in accordance with government auditing standards. So while there's regular auditing standards that do occur, this audit has to be conducted in accordance with government auditing standards. So that adds an additional layer to just your regular audit. There has to be an audit of the financial statements. We have to look at your internal controls over compliance as it relates to the financial statements as well, and also over your laws, regulations, and grant agreements. Then we have to look at compliance specific to your major programs. And when I refer to major programs, that's talking about the programs that are for report. Oh, can you go back? Sorry. That's more specific to the programs that we're going to test. And we have a whole determination that goes through that. Then we have audit follow-up. We have to follow up on the prior year audit findings. And then the bottom one, oh goodness. Let me see. And with Katie, can you show what the bottom one is?
Not. After audit follow-up, the data collection form, is that not?
That's right. Yes. Sorry about that. And then we have
apologize.
No, then we have the data collection form that also has to be submitted. So that all encompasses the scope of the audit that we have to follow. So then we have next is the reporting requirements that we have to report on. So there's various reporting that usually happens with an audit. Just a regular normal financial statement audit that does not have the single audit requires the opinion on the financial statements. Most nonprofits are very familiar with this, and governmental entities are as well, but governmental entities have this added report that's to report on internal control over financial reporting and compliance with provisions of laws, regulations, contracts, and awards. And this report just reports any material weaknesses or deficiencies in internal controls. But then when you add the single audit, both the nonprofit and the governmental have to report all three, including the report on compliance for each major program and report on internal control over compliance. So we're going to report, were you in compliance in all material respects with each major program that we tested? And we're also going to report on the internal controls over those compliance. And then finally, we're going to provide a schedule of findings and question costs. This is really a summary of the audit results. Things that we are required to report as findings are significant deficiencies and material weaknesses in internal controls over major programs, and then any instances of abuse. So this is why we have to test those internal controls over major programs, is because we're required to report things on them. We're required to report any material non-compliance. Any known question costs that are greater than $25,000, we are automatically required to report. And then if you have known question costs and we project that the likely question costs are going to be greater than $25,000, we have to report that as well. So if you have $2,000 in known question costs, but we project it to be a total of $30,000 in likely question costs, we're still going to have to report the $2,000 known question costs. We have to report any circumstances for an unmodified opinion, any known or likely fraud affecting a federal award, and then auditee material misrepresentation of any prior audit findings. So if we find that what you said was going to be happening in the prior audit as a result of an audit finding didn't actually happen, we have to report that.
Kristin, I have a solution and I'm going to do it real quick. If everybody will just bear with me, I apologize for that. Okay, can you see the full scope now?
I think it's still missing the bottom.
Okay, so the very last line is auditee material misrepresents status of prior audit findings.
Okay. Okay, so we went over that.
The next screen.
So in order to be, so what we do at the beginning of the audit, the very first step is determine, does your organization qualify to be a low risk or a high risk auditee? Or a not low risk auditee as it actually is in the standard. I know that's very confusing. But essentially, you have to meet all of the following for the preceding 2 audit periods. So even if last audit, you met all of these requirements, if 2 audits ago you didn't, you are still considered not a low risk auditee. So you have to have single audits performed in both audit periods. If this is your first audit, then you're going to be not a low risk auditee for 2 more audit periods. You have to have an opinion on the financial statements in accordance with GAAP, unless there is some required regulatory requirement for it to be otherwise. There's no material weaknesses in internal controls under government auditing standards. There's no substantial doubt as a going concern. And none of the type A programs, so these are large programs that we have to test, had material weakness in internal control, had modified opinion, or had any known or likely question costs that exceeded 5%. So if you qualify as a low risk auditee, then our audit coverage is only required to be 20% of your total, at a minimum, 20% of your total federal expenditures. If you do not qualify as a low risk auditee, then we have to test at least 40% of all your federal expenditures for that year. So the next slide goes through this whole major program determination that the federal government requires us to follow. And the first step is we have to split up all type A programs and all type B programs. So a type A program for most of our clients is usually about 750,000. That's the threshold. So all programs that have expenditures greater than 750,000 are automatically classified as type A. All those below are classified as type B. Now, once you start getting into really high numbers of federal expenditures, there are different thresholds that we would have to look at. Step 2 is we have to identify all low risk type A programs. And there's very specific criteria. There's no auditor judgment allowed to be involved in this. And it's all based on whether there were findings in the prior year of the programs that are labeled as type A, those types of things. Once we do that, we have to identify type B or high risk type B programs. And that's also based on criteria. There's a little bit more auditor judgment involved, but there is specific criteria that we have to follow. And then finally, step 4 is we have to automatically audit all type A programs that are not identified as low risk, all type B programs that are identified as high risk. And then if the sum of those two is below that 20% or 40% threshold, then we have to add more programs.
Okay, this brings us to our very first CPE code. If everyone could mark down the first word, which is federal, and we'll get back into the presentation in just a minute. Kristin, back to you.
All right, so once we have done the determination, we've decided which programs we have to test, then us as auditors will go to the OMB's website, the Office of Management and Budget, and pull down the most recent compliance supplement. The compliance supplement is what gives us as auditors an understanding of those programs, as well as tells us which compliance requirements are subject to audit, and therefore we have to audit them. Unfortunately, the 2020 compliance supplement was released in August this year, so that made it a little bit late. And then finally, the addendum for all the COVID-19 funding came in December 2020. So there are various extensions that have been issued, but the compliance supplement has finally been released, which I can only see possibly delaying the 2021 compliance supplement being released. But overall, the compliance supplement has 7 parts plus 9 appendices, and the addendum is issued in a very similar format as well. So we're going to cover briefly what those parts are and the appendices. So part 1 is just general background, purpose, and then applicability. So this tells you if I'm this fiscal year, which compliance supplement is applicable. Part 2 is a matrix of the compliance requirements. So it tells you for this program, which compliance requirements are subject to audit and which ones are not. Part 3 tells you every compliance requirement that could potentially be applicable and what the general guidelines are for that requirement. And then part 4 gets into agency specific. So if you're looking for a very specific program, then you go to part 4 and you pull up that compliance supplement to read about it and to understand what that program requires for testing. Part 5 gets into clusters of programs. So if you have the child nutrition cluster or the student financial aid cluster, this is included in there. Part 6 talks about internal controls. So if you're ever wondering what are some good internal controls for these various compliance requirements, Part 6 provides those. And then Part 7 provides guidance for auditing programs that are not included in the compliance supplement. So if there's a program that's not included in Part 4, then this will tell us how to audit that program.
Real quick, if we, before we go to the next slide, wanted to let you guys know if you change your view at the top to 75 or 50%, you'll be able to see the whole slide. I'm not sure if everyone else is having issues seeing the bottom or not, and we do apologize.
The appendix, there's only 2 I really want to point out that are very helpful, that would be helpful for your audit. Appendix 5 lists changes for the 2020 compliance supplement. So this brings forth any major changes from the 2019. And Part 7 talks about other audit advisories. So this is where you'll see reference to all the COVID funding and any other advisories that we need to be aware of. So I'm going to explain Part 2, which is the matrix. The matrix lists out the 12 compliance requirements. There's only 12. And each federal agency can only identify 6 compliance requirements as being subject to audit for each program. So at the most, you're only going to have 6 out of those 12. The one caveat is activities allowed or unallowed. and allowable costs and cost principles are considered one compliance requirement. So technically you could have up to 7 that would be required to be audited. And this is kind of just a snapshot of what that matrix looks like. So if you have program number 10.512, you would have activities allowed, you would have allowable costs, cash management, equipment and real property would be applicable, matching would be applicable, and then reporting would be applicable. All the others would not be applicable. So it's a yes or no answer. So now we're going to get into the compliance requirements. These are the 12 requirements that could be applicable to your audit. And we'll go through each of these a little bit more. So the way this will work is we'll first talk about the compliance side, and then we'll talk about some of the controls that could be in place that we would be looking for when we audit. So on the compliance side for activities allowed or unallowed, this is very specific by program. Every program identifies various activities that are specifically allowed or unallowed. And what we would do as auditors is we'd read what those activities are that are allowed. And then we're going to select a sample of transactions and determine whether they were for an allowable activity or not. So this is when we do the cash disbursement selections or payroll selections. And if there are transfers, we also have to verify that they were for allowable activities as well. On the control side, things that we're going to look for is, was there a manager knowledgeable of the program reviewing and approving those expenditures to make sure they're allowable? So you might have somebody processing the expenditures and saying, okay, this is for an allowable activity, but was there a control where there was a manager reviewing that, and was that documented? Did somebody review the budget to actual results, making sure that everything that was coded to that program was for an allowable activity? And then is there an appropriate time and effort tracking system for the payroll? These are all various controls, and there's no one control that's right or wrong. It's just making sure there's a control in place so that there would not be any activities that are unallowed reported. On the allowable costs and cost principles, there are 7 basic guidelines that make a cost allowable. The first is that it has to be necessary and reasonable for the performance of the awards. So if it's not something that's not needed for the program, then it probably isn't going to be allowable. It has to conform to any limitations or exclusions. So if the program says it can be used for this, but it can't be used for that, it has to meet those requirements. It has to be consistent with policies and procedures used for both federally financed activities and other activities. It has to be accorded consistent treatment. So you can't say, for this program, I'm going to make it direct. So I'm going to make rent direct for this program, but I'm going to make it indirect for this program. You have to apply that expense consistently across all the programs. It has to be in accordance with GAAP. It cannot be included as a cost used to meet any cost sharing or matching requirements. A lot of times the system will prohibit this. And then it just has to be documented. This can be an issue at sometimes if you don't have the documentation, the receipt, or what really that expense was for. So it's really important to make sure you adequately document all of your expenditures. So what we're going to do as auditors, we're going to once again select a sample of transactions, and we're going to make sure they were all for allowable costs. These, once again, is probably the same cash disbursement or payroll selections that we've made for the allowable activities. On the control side, we're looking, was there a manager once again reviewing and approving to make sure it's for an allowable cost? It's that added level of review that becomes the control because there's always human error. Is there a purchase order process that must be followed? Does somebody need to review the budget to actual results once again? And then is there an appropriate time and effort tracking system? The third compliance requirement is cash management. Overall, what this is saying is the The federal government does not want you to receive their money and then invest it and earn interest, or just hold it and earn interest. They want you to be spending it as reasonably as possible. So there's two different methods. There's the reimbursement method, and then there's the advance method that organizations can receive funds. On the reimbursement method, the organization can only request reimbursement for the expenditures after they have actually issued the physical disbursement. For grants on the advance method, you just have to minimize the time between when you receive the funds and the actual disbursement of the funds. Usually, just kind of an overall rule, a lot of entities use 3 days. If you should be dispersing the funds pretty much within 3 days unless there's some extenuating circumstance. Any interest in excess of $500 per year on these draws has to be remitted annually to Health and Human Services. Any program income you receive has to be spent before requesting any additional disbursements. And so what we as auditors are going to do is we're going to select a sample of your cash requests, and we're going to make sure you're following these guidelines. We're going to make sure that the request was either made after you've made your disbursements, or that your disbursements were in about 3 days after you've received the funds. On the control side, what we're looking for is somebody's going to prepare that request, but then was there a manager that's knowledgeable of the program, once again, reviewing and approving that request. This is a requirement, so if you don't have this, you'll want to make sure you do get it. It is required under the uniform guidance that you have a written cash management policy. So you want to make sure you do get that implemented. And then does someone review program expenditures to ensure the requests are timely? Sometimes we'll see the requests aren't made until months later, and that can get into some compliance issues if you aren't requesting them in a timely manner. And then the fourth requirement is eligibility. This can vary from program to program. There's various requirements for individuals. There could be requirements for a group of individuals, and then there could be requirements for subrecipients. So what we would do as auditors, if it's for individuals, we're going to get an understanding of what the requirements are and what those benefits are that should be paid. We're going to select individuals within the program to make sure they met the requirements, and then also recalculate the benefits paid. If it's for a group of individuals or even an area, we're going to obtain support to make sure that that area is really meeting the eligibility requirements. And then if it's for a subaward or a subrecipient, we're going to select those and make sure they were awarded within the funding limits and that they were also eligible. On the control side, some of the major controls, that manager review is always going to be a good control, and make sure it's documented, but have somebody review the determinations. If you have somebody making the initial determination, is there a manager that's reviewing it? There's always that human error in those initial determinations. And then you just want to make sure nobody can do anything, make a determination that shouldn't be made. Is there a checklist required used for eligibility determinations? This is very helpful. Sometimes these eligibility requirements can be very long. So having a checklist just to make sure you've got everything documented is helpful. And then making sure there's training requirements for the staff that are making those determinations. They know why these determinations are important. So next I'm going to turn it over to Colleen, and she'll start her presentation. But first, Katie.
So much, Kristin. And again, this brings us to our second CPE code. We'll leave this up for a couple of seconds, and it's single. So please make note of that, as you will need it for your evaluation form that will come out after the presentation. Okay, Colleen, over to you.
Great. Thanks, Kristin. Kristin gave you a lot of good information on the prior ones. I'm going to jump in on this compliance requirement, which is the equipment and real property management. What this really keys in on is that if you're purchasing any of your property fixed assets with federal funding, that you're doing a good job of keeping your records in regards to what has been purchased with federal funding and what has not, that you're maintaining any procedures around how you track that you're maintaining those actual fixed assets, and that you're doing a physical inventory at least every 2 years. Obviously, it might be a good idea to do it more often, but it is minimally done every 2 years. So what we're going to do is we will sample the equipment that was purchased with federal funding. We're going to make sure that you are properly safeguarding it and that you're maintaining it appropriately to the guidelines, and that when we are selecting additions and disposals, to ensure that you're meeting the requirements. The big thing with the disposals is on some of these federal programs, and it depends, but you're going to have to make sure that you're reporting when you're disposing of that property, because each entity at the federal level may have different requirements for what you're required to do when you make a disposal. That could be that you return funds back to them from the proceeds or whatever their requirements are. When looking at equipment and real property, again, controls, it's important that you are tracking those fixed assets, whether it's purchased with non-federal funds or federal, and you're able to identify the different fixed assets for each purchase. So does your system, your federal fixed asset system, I know that people can use some specific software or they use spreadsheets. What is being used to make sure that you're identifying those fixed assets? And is there controls in place to make sure that that's being reviewed regularly? And does management review the physical counts and follow up on any of the identified discrepancies if there are any items? So the next one is going to be matching, level of effort, and earmarking. These are 3 different items within one compliance requirement. So you could, on each individual grant, either have all 3, have 1 or 2 of these items. So we're first going to jump into matching. So this is where you would find in your grant agreement from your funder that you're required to match a particular percent of the funding and bring your funding to the table to sort of supplement this program. And so you can add some more some support to this program. This can be in the form of allowable costs incurred. So you choose to say select an employee, and that employee you don't charge back to your actual funder for reimbursement. You're calling that match cost. Or it can be an in-kind contributions. This can be people are donating items to your participants if you're using a housing program, or maybe you have partnered with a community partner in which they provide additional supplemental services to your participants that you would otherwise have provided for that program. The second item is the level of effort requirement, and that is just making sure that specific levels of services are provided. We see this and do some testing in regards to your payroll. Are you tracking your employees? Are they tracking their time to the programs, especially if you're a organization that has multiple programs and maybe one person you would maybe consider them being 20% to one program and the remaining 80% to another program, but does their timesheets show that level of expenditures and that level of service to be provided to each of those programs? Earmarking is where a program is going to require particular amounts, minimums or maximums of program funding to be used for a particular purpose or for particular participants. So we see that's a lot in administrative costs on a program. So a lot of times a program requires you to spend at max 8, 10, 12% on administrative expenses. So we're going to be making sure that you're hitting those percents, minimum or max. And so what we're going to do is we're going to pull some of your overall the whole year. A lot of times this is where we're going to end up for matching and earmarking, pulling all of your cash requests and what the support behind those expenses are to validate, one, that you've hit your admin costs at 8%, or that what you're reporting and your support that you're providing to your funder as a total across the whole program is meeting your match requirement. Again, the level of effort, a lot of times that isn't within the payroll testing, which is being done also for allowable activities and costs. So we are going to perform those recalculations just to ensure that you've met each of these requirements. For these as an overall, for the control side of things, we're going to find that we're trying to see, is your accounting system able to track the requirements? And again, as Kristin has keyed in on each of the previous items, Is management reviewing the calculations? Is management aware of where an organization stands in terms of their match requirements for the year, in terms of where they stand for what they've put in for admin, knowing what's going to be coming down the pipeline? So it's incredibly important. I mean, we keep using the word manager or supervisor, but if it could be a grants manager, it could be the CFO or the executive director of the small organizations, just making sure that there is someone preparing and someone reviewing. The next requirement is period of performance. This one can be a little confusing. You know, everyone has their grant agreements, and as we see in the local nonprofit area where the federal funds is, you may have a program that you have done for years and years, but you have a different grant agreement for a 1-year period, a 2-year period, a 3-year period. It is incredibly important that you understand the expenses that you're charging for each of these particular grant agreements. So only allowable costs incurred during the period of that grant agreement are charged to that particular grant agreement and charged back to your grantor for that. So some incurred costs may be charged pre-cost or post-cost may be charged outside of it, but really you're going to have some supporting documentation for us that shows that that was authorized by your grantor. And you just needing to understand where those items are and making sure, particularly at the end of a grant period and the beginning of a grant period, especially if that if it's a program you've been doing year over year and you're just really providing those services, just really making sure if your grant agreement ends on June 30th and you have a new agreement on July 1st, that you're making sure you're hitting and making sure those expenses are separated into and requested for reimbursement from the correct grant. So we'll take a selection of cash disbursements and payroll transactions. This is where we're able to do some dual testing, which I'll get into a little bit later, across those items. And we're able to look at those same samples and look to see to make sure that you're hitting those properly. Again, just like with the allowable cost, is someone preparing those and posting those to that program for reimbursement, but is someone also knowledgeable in making sure that those approved expenditures, those allowable expenditures being put into the correct period? Our program managers making sure that it's also aware of the overall budget for the program and that those are in the correct budget line for that correct grant. And then also just being informed of the grant period. How has that been communicated to the staff? So our next item is procurement, suspension, and debarment. You'll see this, particularly the suspension and debarment, that's going to be the larger contracts. Procurement was a big hit topic a few years ago because originally when uniform guidance was placed and took over for A133, it was important that we give entities time to get a good procurement policy in place. So that was one that was extended further out into the start of uniform guidance. So you probably heard us talk to you quite a bit if you're one of our clients, but it's important that you have a proper procurement policy in place and that the procurement policy is for the entity and that you have an understanding of what is required for each of the levels of expenditures. In our area, we primarily see most of our entities are sitting in that micro purchase area. So that's anything in excess of 10,000. Keeping in mind that it is not 10,000 for a one-time purchase. That is 10,000 as an aggregate for that particular vendor. And so making sure that you have an understanding that it's not just one-offs. So if you were to, for example, go out and to get a contract for a IT services or something along those lines, if that particular contract is in excess of $10,000, it's really important that you understand what the requirements are if you're going to go out to do that for yours, whether you are crossing that line for a small purchase, a sealed bid, or anything along those lines. Procurements must ensure that there's full and open competition. It's important to know who is competing and who is being provided with the services. So for these, we'll select cash disbursements to test for proper procurement. It is important to understand where your line is and look at vendors as a whole. And then for suspension, debarment, and prohibited, it's important to understand who you're doing your business with, not only as an entity as a whole, but particularly with federal funding, because there are some vendors out there that have been suspended and debarred from working with the federal government and to be paid with federal funds. And this, it's important particularly for the contracts that are equal to or greater than 25,000 or any subawards that are being granted. So it's important to know who you're providing your subawards to and who you're making larger purchases with. It's important to never contract with an enemy of the government and who they have decided should not be worked with. So what we'll do is we'll make any selections of contracts that are over 25,000 as the aggregate, and then we need to verify that they're not suspended or debarred, which is maintained by the General Service Administration. For these, the controls, again, one of the things that you saw us as if you were our client, or we hope that all of your auditors were doing, was verifying that you had a written policy and procedure over your procurement policies and over your suspension department requirements. And that's required by uniform guidance. And because it was required, you should have been asked for us to obtain those written policies and procedures, making sure you're looking at those often and updating them if there's something that's changing in your organization. We also is required and needed to verify that there was a conflict of interest policy for those that were responsible for procurement. This is important because you don't want them using entities or other people for the procurement in your organization, paying them a related party, someone that they're related to that maybe would compensate from this. Do you use a checklist for all of your procurements so that those that are maybe lower level that are getting together a contract before it goes to management, do they understand that it needs to be reviewed and approved and that this checklist needs to be followed? And then again, does the staff understand what those requirements are for the procurement for not only in your entity, but for federal funding particularly? Finally, do the contracts have a clause or condition to cover transaction with the party or certifications required from the contracting party? And are contracts reviewed and approved by management to ensure proper parties are all excluded? So just making sure that if you have one area of your organization that deals with the contracts, that someone who is knowledgeable and understanding of these entity and procurement requirements is reviewing that.
Colleen, that brings us to our third CPE code, and then we'll let Colleen start back up in just a moment. Okay, Colleen, back to you. Thanks.
All right, our next item is program income. You'll see this for entities that are receiving funds that are fees or for services performed. They are used for rental or real estate property acquired under federal awards. You'll see this a lot in areas of housing programs. If you were provided with funding to purchase a building that will maybe house some of your participants in a particular program and they are paying you rent, that rent is program income. Making sure you understand that and what you're using that for, the sales and commodities of items fabricated, license fees and royalties on patents and copyrights, and principal and interest on loans made by federal awards. Another example for that fees and services performed that I can give you is if you have a program in which you're being funded just to provide, make sure that you're working with companies in a particular area. And that's maybe payroll to maybe for your sales and marketing to try to bring business in for those particular areas or particular industries. And you get a contract with one of those people in that area or that industry, and you have a set, obviously, revenue over expenses. Anything that's left over between the revenue and expenses could be program income, and that you would be required to place back in to be used to continue and further that program, whether that be for additional training for your staff or whatever the program is requiring and what your grantor is requiring you to use that program income for. And that's what we're going to be looking for. So program income may be used in one of three methods: deducting from total allowable costs that you're asking to be reimbursed for, adding the federal awards with prior approval, and then cost sharing and matching requirements. And this can be used to meet your cost requirements, and it's usually with prior approval. So what we're going to do is we're going to be looking at your program income as a whole, and we're going to be looking at performing to determine if that program is not only properly determined and calculated, but also that you are using it in requirements that program has set forth. Again, we're going to verify that you're using that program income within the grant program budget. and what has been required for that program income. And that's whoever is in charge of tracking this, using it and verifying it for reporting purposes, is also having someone verify and look at it. And also maybe your program accounting system is able to track it. Who's tracking it? What system is that being used? And our final is reporting, which I'm sure is everyone's favorite. So as everyone knows, when you have federal funding, you are required to have some reporting back to your funders, back to whether you've got some subrecipients and things along those lines. But the standard reporting is direct recipients of grants would be your request for advance or reimbursement. So that's typically on a monthly basis or one time for the advance maybe, but any outlays that are requested for reimbursement for your big construction projects, and then your end of the year federal reporting, financial reporting. So a lot of times it's 90 days post the end of a program ending, term ending, and just making sure that you have an understanding that your subrecipients may also have the same reporting. When you grant down to a subrecipient, and understanding that when you do that, that they will have the requirements also. And we'll get into some subrecipient testing items and what's required there in a moment, but just making sure that in that reporting, you're obtaining their information and so on. So performance and special test reports, they're usually report data that meet most of the same following criteria: direct and material effect on the program, and if you're capable of evaluations against objective criteria. So just really making sure you're doing what you're supposed to do within that program. Again, with the controls, a lot of times we'll see that the accountant is pulling this information and that they're making sure that it's tying back to the financial and supporting information, which is very important to us. And so what we're doing is we're not only seeing what the system and what the appropriate staff are pulling, but also is management reviewing and signing off on those reports prior to them being submitted to the actual funding agency? And does the accounting system have the capability of assisting with producing those reports? And if it is, what kind of controls are in place within the system to make sure nothing's being tweaked? That's the big issue that might be if you're using a spreadsheet. Is there ability to have that changed after it's reviewed? Is it locked down? Things along those lines. Our next one is subrecipient monitoring. And the first thing I want to key on and to make sure that you have an understanding of the difference between subrecipient and vendor or subcontractor. So making sure that you have an understanding of when you're spending those federal funds to a vendor, which is someone who would provide those same services to anyone. It's not someone who is subject to these requirements, or a subrecipient where you're providing them a grant agreement that provides all these requirements also, and that there's someone that you are expecting to do this program themselves. So pass-through entities must identify the award and applicant requirements. You need to give them a grant agreement. You need to be providing your subrecipients with these same requirements, with the assistance number of the program that you're providing, that they're required to do a single audit if they are exceeding federal funds of $750, whether that's from you in total or you in part in another entity. And then it's a requirement that you evaluate the risk of your subrecipients and that you're doing a good job of monitoring your subrecipients. So what we're going to do is we're going to take a sample of subrecipient contracts to ensure that the proper award agreement has been provided with those items I noted, and that you're completing risk assessments and understanding whether inherent risks are within your subrecipients, and doing proper monitoring was completed. With this, we need to make sure that you have the written policies and procedures. Like I said, it's very important that your subrecipient grant agreements are worded properly. They're reviewed annually to make sure that you're hitting all the requirements under uniform guidance under that federal funding that you have. And one of the pluses would be to have some standard sub-agreement templates, and that those are reviewed annually, just to make sure you're getting all those keyed in items. Do you have someone, maybe you have a grants area that follows up and reviews your subrecipients documentation and ensures the policies are in place, but are they periodically making sure you're doing that is a management or a grant manager, making sure that that area is doing the monitoring timely, appropriately, and getting all the correct information? And our schedules to track monitoring so that there's a clear cut understanding of when that monitoring is going to happen and when it shouldn't happen. So last but not least is special tests and provisions. So this can vary greatly, as it says, from program to program. This is kind of the dumping area for the federal agencies to put any one-off tests that do not fit into any of the compliance requirement areas. So for a housing program, you could see this be where they have rent reasonableness. So to make sure that a unit is not being, the cost of a unit is not higher than what they believe it should be in the area. This could be where there's wage requirements on construction or on contracts. There are a lot of things that could go into the special test and provision. So it's important that you understand what each of your grants are. And this is where you're gonna have a good understanding of what these are, because these are almost always identified and very well detailed. What the procedures related to them are in the compliance supplement. And so when that compliance supplement is issued each year, it's important that although it is a very good guide and understanding for us as auditors, it's a great resource for you as the grantee and the person putting this program into fruition and making it work. So understanding this, it's a great resource. So making sure that each of these special tests, you have an understanding of them and what the compliance requirements behind those are. For the controls on these, because it can vary so differently across the programs, you're going to see that these are pretty much the potentials of all the prior ones also. Are there controls in place to make sure that there isn't any potential areas of non-compliance? Is management reviewing and assessing any areas where something could go wrong and it could cause non-compliance? Do you have your policies written if that's an item that would require written policies and procedures around that area? And is there a level of review to ensure that all program administration is being done in compliance? So real quick before I go on to sampling, I wanted to make sure that I noted back in reporting, there is a new reporting requirement that's going to be coming out through the FFATA for COVID funding specifically. And hopefully we have some more information that will be coming down the pipeline. I just want to make sure everybody's aware if you've had COVID, any COVID or CARES Act funding, that there will be some additional reporting. For the sampling concepts, so why do we as auditors choose the things we do, and why do we test the way that we test? So we are required to test on internal controls over compliance, and we are required to obviously test to make sure you're in compliance with your program. So we issue separate reports within our audit when we issue for the internal control over compliance and the compliance itself. That's directed material to the major programs, as Kristin noted, with those how those are determined. So it's important that we're testing not only that you're meeting the compliance, that you have controls in place and designed, but they're also operating effectively. And concerns that the test, we are required to meet a particular level of risk, a lower level of risk. And so what's important for us too is that your controls are in place to make sure that the compliance is happening, and that making sure that there aren't any potential magnitude of non-compliance. So for the controls, is the control operating or not? As I said, is it effective? You might have all these great procedures written up, but if no one's following them and the controls aren't there, then there's an issue. And for the compliance, did you comply or not with what was required for the program? So attribute testing allows us as auditors to project the sample error. So if we find when we're sampling that there's an exception and it's a finding or an error, we're able to use that attribute sampling to be able to give us a sample error across the whole population, so we can determine what the overall best projection would be if this error was in the entire population. So for the sampling process, we'll select items that are representative of the population. So it's important for us to understand and know that we have the full population. So that's why you'll see us wanting to make sure that reports that show expenditures tie out to your SEPA and to your trial balance. So we'll pull individually significant items, usually around the materiality of the programs. We are required to determine materiality for each individual program being tested. And then beyond those individual significant items, we will do complete sampling. And as I noted previously, there are testing and requirement areas that we can maybe test at the same time with the same sample. So accounts, allowable costs and period of performance. Those are good ones that can be looked at. Level of effort and payroll testing in terms of the allowable activities and allowable costs are great because you're looking at for both of those items in the same sample. So just and this is where we can look at the controls, but also understand though, if we find an issue with controls, we may have to redetermine and reconsider what our sample size is for the compliance testing itself. Because if we have an exception and we know that the controls are not in place, it means that our risk level has increased. And in order for us to bring that back down, we're going to have to increase that sample size. So as a firm and as an industry, we have some pretty standard sampling practices that are used across most industries, most firms. And so these sample numbers you're seeing are pretty standard that you're going to know. So we have to look at several things when we determine the number of the sample size. And this example is for populations or individual items over 250,000. So if you had over 250,000 cash disbursements, we would be looking at this sample. So we have to determine if that particular compliance requirement or that control is significant, or at higher inherent risk, or significant and lower inherent risk, or is it moderate, significant, or higher inherent risk. So we are looking at where the risk stands, and then we're choosing the sample size. But keeping in mind, when we make these samples sizes, we're expecting 0 deviations, which means 0 errors when we go into test. And so that's why when we're looking at your monitorings from your grantors, if there are any, if we noted they had quite a few exceptions, we might have to increase in using our sample tables for our sampling, increase it to a 1 deviation expected or higher, which is going to change that sample size. It's pretty much consistent from the internal controls to the compliance sampling, but keeping in mind if we have issues on our internal controls, it will affect the sample size of the compliance area. And so we're also looking at whether that compliance area is high risk, moderate risk, or low risk, and we'll make those determinations on what that sample size is. And with that, that comes to the end of our presentation. The questions you should be asking yourselves: do you have controls in place? Is someone preparing and then someone above that reviewing and approving? Have you identified federal awards and determined the expenditures for the CFA appropriately? And have you read that compliance supplement for your programs? As I said, it is a great resource, not only for us as auditors, but for you as the grantees to understand exactly what we're going to be coming in to look at for each of your programs. And I appreciate all your time.
Thank you, Kristin. Thank you, Colleen. And thank you for everybody for attending. As I said, we'll be sending out a link to the recording as well as the PowerPoint deck that was used for today's presentation. And if you need CPE, we will be sending out the information for that as well. Thank you for attending and enjoy the rest of your day.